We're going to be covering the buy the dip strategy. We're going to look at this LYB trade, just pulling this up real quick. So this is looking at the last 2 years, and then right now it's loading this share link. And so it's loading all of the settings from when this strategy was tested. I want to make a comment about these strategies. So each of these different strategies has different technical conditions, different close conditions. It could be different stops and limits, or it could be a technical close, like if the stock drops down below the S&P or the simple moving average 200-day. And each of these has been back tested quite extensively in a variety of scenarios, a variety of different market conditions. And this is a very curated list of trades that made it here, because it's not just anything that triggered today. It's things that triggered today that worked over various time frames, that have more wins than losses, that have good average returns, et cetera, et cetera. So this is a nicely curated set of trades, and it's supposed to just kind of give you a quick jump start in your trading. So once I've clicked this share link, it's loading all of the settings that were used to create this, all of the technical settings, all of the opens and closes, all of the actual strikes that we're going to use. And rather than saying a strike like buy something when it's $5 out of the money, we use something called Delta. If you're not familiar with Delta, inside of Learn, there's lots of great resources talking about it. In fact, there's an entire 2-hour options education thing on implied volatility and Delta. So if you click over to education, you click vertical spreads, Delta IV, this will go into great depth about all of that stuff that's included, free to you. It's about 8 hours of options education built in to your subscription. So definitely hop over and take advantage of that if some of these terms, aren't the way that you're used to trading, but you want a little refresher. Okay, so right now we're looking at a strategy called buy the dip. If you click here, you can watch another video on buy the dip that goes into how we created it and the testing that we did. So it's a call, and it's using a 40 delta call option. So something that's a little bit out of the money, but not too far out of the money. One way to think about delta is that the higher the delta, the higher the chances are that the stock is going to end up above that strike price for calls, so where the calls can end up in the money. It's one of the mathematically accurate descriptions of delta. There's several different ways of looking at it, but we're going to be looking at something which is a little bit out of the money. And according to the options math, there's about a 40% chance that that the stock will reach that delta. We're looking for something about 30 days from now. And if there's not something exactly 30 days from now, it'll find the closest it can. Same, if there's not an exactly 40 delta, it'll pick the closest delta to that. We're going to buy, so we're long. This is a never trade earnings strategy. And so what that means is that if you're within 2 days of an upcoming earnings event, you would want to get out of the position, and then you'd want to wait 2 days until after the earnings event, and then wait for the technical conditions to become true again in order to enter. These are the technical conditions for entering the trade. You can read them here. You can also click, it says open trade when. If you click the technical open, it'll give you this kind of a breakdown. And it says that we enter this trade when the stock crosses up through the 200-day moving average, when the stock is also above the 10-day exponential moving average, which means you're weighting the recent data a little bit more recently. So there's kind of a recent surge in the stock price. And that the 20-day RSI is below 70. And RSI typically used to consider whether something is overbought or oversold. And if it's over 70, it's considered being overbought, like maybe it's kind of at the end of its upward run. If it's under 70, all we're saying is it's not overbought according to that indicator. And so that's the strategy. And we have this nice little green flag that tells you, okay, it triggered at some point today. That's why it's on the today tab with a little blue today here. This tells you that right when you ran the back test, all of the technical conditions are still true. And even if this back test shows that it ends today, you might see a back test that ends a few days previous, just because that's the last time we ran the specific back test you're looking at. But that's not the last time we looked at the technical conditions. So if it shows up here, it means that all of the technical conditions were true when this triggered, and the earnings conditions and everything else. This little green flag means they're still true at this very moment. So if you scroll down here, you grab this little slider and move it over, you can kind of zoom in on the chart, and you can see that the technical conditions are all true, that it's crossed up through the 200-day moving average, and that it's above the exponential moving average still. Okay, so now the question becomes, okay, we want to place the trade. We know that it's this 40 delta call that's about 30 days out. So I'm going to click the show options button. There's two ways to do this. This little show options feature is a cool feature that annual subscribers get. So that's a nice little benefit. If you click the show options, it just says, hey, this is the position that you'd be getting into. The closest thing to 40 delta on the options montage is the 95 call. And the closest thing to 30 days out is July. That's relatively simple to do with a single leg strategy, but when you start getting into more complicated strategies, like if you click a custom strategy, then this is a pretty nice time saver. But if you don't have that feature, all you do is click the show options chain, or you can do this equally as well in your brokerage. This can filter by the days to expiration. And so I'm going to click 31 days because that's the closest to 30. And you can see on this, there's relatively few strikes, and this is the call delta. And so we have 3 strikes that have good implied volatilities that have good deltas, meaning the bids and asks make sense. This montage just shows the midpoint of the bid and ask, but your choice would be between the 57 delta and the 21 delta in terms of getting as close as you can to the 40 delta to follow this back test. So the 57 delta is a little closer, and that's why this strategy shows that it's going to it's saying that the 95 calls would be the closest. But if you want to, you can say, hey, those are both close. What's been better historically? Because my choices there on this 30-day options chain, so this is 31 days out. I had a choice between like a 57 and a 21. Neither one is that close to 40. Which one's actually performed better historically? So I'm looking up here. So when there's a comma in front, it just says only run this one ticker, and only by having a comma, it's saying just use one delta. There's a little settings gear here. So when you click the settings, you can see for the deltas, when there's only one ticker being used and you're only running one delta, only one strike at a time, it's going to use the middle one. But if you take away this little comma, what it says is, I want to test all of these deltas. So I want to see 5 different, essentially strike prices, 5 different entry points back tested side by side. And then I want to use that information to decide, hey, do I want something like a 55 delta, or do I want something like 22 delta? And so you can see the 60 deltas at 209, and I could actually, if I wanted to get real particular, I could actually plug in whatever our delta was right now, 57, and I could plug in 22 and say, okay, which one of those has worked better over time? Likely the 20 and the 22 delta are going to get you the same strike anyway. But if you want to be very precise, you can say, which one of these has performed better over time. And when you look in this particular strategy right now, it's actually saying, hey, that 22 delta has about a same number of wins and losses, but the total return's been a little better. And so you might make the decision on that particular montage to just go ahead and take the 22 delta if it was a kind of a close call. You don't necessarily need to get into that level of detail. I often don't. This one is saying, hey, this has been tested not just in this one ticker, but across lots of different portfolios, lots of different time frames. And the 40 delta has worked relatively well to get a good balance of win rates and return. And so clicking down through here, I'm just going to kind of follow the same steps. This is just a little quick guide about what strategies are on the Today tab. But we clicked this LYB ticker and showed the ton of technical open conditions. The close conditions are this, 50% stop or 50-cent limit. And using this trade setup, the most clear-cut